Hey everyone, I figured I'd take my lunch break here to give you a few highlights of this. The latest update from James Check usually comes in on Thursday mornings, Monday mornings, and Thursday mornings. This one arrived last night at 8:49 p.m. and I wanted to walk you through some highlights of it because if you are in the position where you have just bought a bunch of Bitcoin above $110,000 or you're considering buying a bunch of Bitcoin for above $110,000 or at any price from here forward, I thought you might want the highlights from James Check on what the current dip looks like and whether it's anything to be worried about. How does it compare to prior dips in the marketplace, etc. All right, so I am going to share my screen here, and we are going to look at this document, which is the latest from James Check, and I'm going to read you some highlights with my commentary. First, he titles it, "That's Not a Dip." He said, "Is the fear we're seeing about this sell-off warranted? And is the damage done enough to justify this fear? How does this compare to the start of prior bear markets? Let's find out." So as we've talked before, most people in Bitcoin think we are done with the 4-year cycles where the price goes through these natural 4-year cycles where the peaks were in 2013, 17, and 21, and possibly 2025 if we still have a cycle. Most people think there is between a 51% and a 60% chance that we are not going to go through those cycles anymore because the Bitcoin market is much larger than it used to be and adoption has smoothed out significantly. But that leaves somewhere between a 40% and a 49% chance that we will go through a bear market that lasts like a year or something like that at some point. And the question everybody has is every time we hit a new all-time high, the question everybody asks is this the top? And then every time the market dips, everybody's like, is this the start of a bear market? everybody is like going crazy about when the price is high. Is this the top? Is this the top? Is this the top? Because nobody wants to buy the top and then have to, sit on an investment that's underwater for a year or two. But then every time it dips, everybody's like, oh no, is this the start of a bear market? Are we going to be like through a brutal year-long slog of downward marching prices? And it's just, everybody's just all freaking out. So James Check, one second. James Check does a much better job than anyone else in the entire universe of saying, when the price is hitting new all-time highs, does this feel like a top? Is it overheated? Are way too many people in way too much profit that they just can't resist, selling and improving their lives somehow? And so far, every, peak we've hit, he's like, this doesn't feel like we're there. This does not feel like a huge blow off top, which means a very jagged, huge run up followed by a price correction that we got in 2013, 2017, and 2021. So far, every price peak, he said, this just doesn't feel like the huge blow off top that you should be worried about. And so far, every dip, he has said the same thing, which is this dip does not feel like the start of a bear market. And so far, he's been right because all of his analysis has tracked exactly what Bitcoin has done. Now, why is this relevant? Why can't you just buy Bitcoin and not worry about any of this? The answer is you can, but human psychology is such that people tend to not want to buy right before the price of something goes down because it just makes them feel bad in the pit of their stomach, even though in the long term it doesn't matter. So, for example, if you knock a zero off all the prices, $125,000 would be the equivalent, back 5 to 7 years ago of 12,500. And the lowest he predicts that Bitcoin would ever go, even if this is the start of a bear market, is like 80,000, which again sounds insanely low, but I mean, we dipped below that back in April temporarily and then zoomed right back up to 125. So who cares? So his point through all of this is like, well, let me go back to my analogy. If 120,000 is 12,000 when you knock off a zero and 80,000 is 8,000 when you knock off a zero, does it even matter whether all the Bitcoin I bought back in 2017 and 2018 was bought at 8,000 or 12,000? No, all of those numbers are so deeply in profit today that it's just not relevant. I wish I had bought a lot more $12,000 Bitcoin back then instead of waiting for lower prices and hoping I'd get it for 10,000 or 9,000 or 8,000. Like, I just should have bought as much Bitcoin as I can. And the same will be true of this in the future. But again, humans have a generally low tolerance for pain, and therefore we're going to walk through this analysis. So again, is this a dip? Or he says, that's not a dip, ... Is the fear we're seeing about this sell-off warranted, and is the damage large enough to justify this fear? How does this compare to the start of prior bear markets? Let's find out. So I highlighted everything in green that I'm going to read. It's pretty heavy on the beginning of this update, but then I'm going to skip a huge amount of this update as we go on. Obviously, I'm not reading the whole thing. I'm reading a few highlights. And my recommendation, of course, is that if this is interesting to you, go subscribe to James Check's Check on Chain newsletter, which comes out 2 or 3 times a week. It costs $29 a month. It is the best investment I've made in Bitcoin, other than Bitcoin itself, and probably my BitKey that secures my Bitcoin from hackers and scammers. But it's a great investment, in my opinion. Okay, and again, when the price dips, it gives you good clarity of like, should I freak out or should I not freak out if you're into freaking out? All right, he says the bears, remember, bulls are optimistic, bears are pessimistic. Bulls, because bulls attack with their horns going up, think markets are going to go up and they're optimistic. Bears attack with their claws slashing down, which is why a bear market is when the market's going down or pessimistic. The bears are out in force. Bitcoin has pulled back a whole ... 9 percentage points from fresh all-time highs, and you'd think the end is nigh. Yeah, if you go on Twitter, people are freaking out. It's once again so over, which happens. Everybody claims at every little dip that it's so over. The most fascinating thing about this cycle with no equal is how remarkably scared so many investors get during what are historically irrelevant price dips. Back in my day, I wouldn't get up for anything less than 20%. So this is a good chart. I'm only going to cover a couple charts in here. Normally, I recommend people just skip the charts because they're too complicated for, mere mortals. But this is the price drawdowns from all-time highs throughout history from 2016 or 2015 to the present. You'll see a 9% dip is nothing compared to the drawdowns as high as 77% in 2022, 84% in 2018, and even higher than that, 92%, 93%, I think, back in 2015, 2014, maybe it was 2014. So short take is he basically like, look, this dip is like nothing. In all seriousness, though, as we covered in Soft Around the Edges, it is the right time to be somewhat cautious in the immediate term simply because the key demand drivers of the exchange-traded funds, ETFs, and the treasury companies have meaningfully slowed down. Here, however, we're a long way from needing to panic and put full bear market goggles on. In fact, I'm not even sure if we need to put on a bear market monocle at this point, or just yet. Today's post is going to be an investigation into the damage of the dip so far and an analysis of how low the Bitcoin price needs to go before we start to break the conviction and sentiment of the bulls. I keep trying to shorten the things I'm reading, but I end up just gumming up the words. So I'll probably just read every word, which is smoother. I'm trying to shorten this thing because I know my videos are way too long. Okay. In this piece, I run a damage assessment focused on how bad the unrealized losses are in the market. The conclusion, honestly, is that you need a microscope to see them. That's a good thing. Not only is the damage to investor portfolios insignificant, but we also don't have any meaningful evidence of fear in realized loss metrics. That means people actually selling at a loss. When I run a set of simulations for how low the price would have to go before we get concerned, I arrive at the following framework. Below the STH short-term holder cost basis at 108,000, put one bear market goggle on. The market has to reach $90,000 before this dip will be on par with damage at the 2024 Chopsolidation, which was between March and October of 2024, and the 2025 tariff tantrum lows, which happened in April of 2025. Prior bear markets, if you can believe it, were started by a sell-off that would have to reach 80,000 to hit equivalent damage. Ironically, this is also where the cost basis for the ETFs and the company MicroStrategy, now Strategy, is located, as well as the true market mean, which is his expected bear floor in the case of a bear market. If there is a bear market, he thinks around 80,000 is the lowest it will go. In my honest opinion, and reserving the right to be wrong here, the current market conditions share far more DNA with a dip than with a shot across the bow sell-off, which starts a bear market. And then he always likes to refer to his two personas. Check the analyst is like, his analyst mind, and check the hodler, which is hold on for dear life, HODL, hold on for dear life, is basically him as an investor in Bitcoin that's holding for the long haul. So as an analyst, he says, I'm cautious, but somewhat optimistic. The damage is minor at best. And until we drop below the short-term holder cost basis at 108,000, I remain a structural bull and tactically expect chop solidation, meaning we're probably going to chop sideways for a while while the market digests price points above 110,000. Everybody gets comfortable with that. Everybody who wants to get off the train gets off the train. Everybody who wants to get on the train gets on the train, all that. Anyway, we talked about that in quite a few past videos. And then check the hodler, which is people like me. I'm being patient and stacking Bitcoin. He calls it sat stacking, but what he means is buying Bitcoin. Nibbles on a tasty red days like 113,000. I'm prepared for lower prices, but also am ignoring the bear posters, meaning the pessimistic posters on Twitter until the data tells me otherwise. He has his own video. I know I do these videos where I try to extremely simplify everything for you. But obviously, if you're a subscriber, you get a full video of him explaining his stuff to you instead of me explaining it in a simplified manner. Again, it's worth $29 a month if you just bought a bunch of Bitcoin, or you're considering buying a bunch of Bitcoin, or you like watching the price of Bitcoin and want to understand why it does what it does. It's the best place to find out. I love his content. It's the first thing I always read. All right. Again, I'm reading a lot of the early part of this thing, but then I'm going to start skipping a bunch of it. The game plan. Before we jump into the charts, I wanted to outline my thought process for how I started this analysis. Start with the initial conditions. We know demand is soft, so we probably are not going to head back to all-time highs just yet. We're also still trading above the short-term holder cost basis of 108,000, and this pullback is still really quite mild at just 9%. Cautious is the correct base case, but I wanted to see if I should be outright bearish, and if not, what the thresholds would be to switch. Okay, then I'm going to skip a bunch of stuff here. And then he says, so long as the price trades above the short-term holder STH cost basis, it is still okay to be bullish, optimistic, albeit cautiously so. The market has seen value in this region before, and it stands to reason it will do so again. If, however, we start to trade into and below this zone, watch out. Whilst we had significant demand in this price range before, that doesn't mean future demand will see it the same way. The lower we go into and below this region, the more investors will see their recent buys go underwater, which tends to impact their willingness to keep chasing the market lower. He says, my base case is that we will find support in this region. The first major warning signal will be sustained break of the short-term holder cost basis at 108,000. Should that occur, I think we should consider the odds of a more protracted bearish trend to have been meaningfully increased. Again, if it's me and I had US dollars, which I don't, to invest in Bitcoin, I would invest them right now. I just would, because updates like this tell me I'm still fine doing that. He says the good news is we're not even close to getting there yet. Not even close. Honestly, this chart actually doesn't look at all nasty and is in fact one of the least nasty pullbacks of the cycle. Again, I'm not going to cover the charts because they're too complicated for the vast majority of people, even some of them for me. Yes, this dip should have us cautious, but so far it still looks more like a dip than a bear. It can certainly deteriorate and the top just might be in, but those are also speculations for the time being. Nothing we have seen in this data looks any different than any other dip we have experienced and survived this cycle so far. We must stay vigilant, but also shouldn't panic unnecessarily, and at least until there is significant evidence to do so. Sorry, people are just texting me constantly. It's one thing to have a coin. Then he talks about when you should worry, which is once everybody's underwater on their investments by a significant amount, people start to freak out. It's one thing to have a Bitcoin underwater by 5%, and truthfully, this is just another day in the life of a Bitcoiner. Every buy will go underwater by some small magnitude, at least at some point. It is a whole another story when you buy a big fat chunk of Bitcoin, and then the next thing you know, you're down 30% or more, which is what tends to break people's optimism, which results in protracted sideways motion or downward motion for a period of time. He says, I can't see any red today, which means we're not even remotely close to having serious paper losses in the market right now, meaning people that are underwater, even if they haven't actually acted on that. Folks sure are bearish on Twitter concerning the current damage is mild at best. I am very thankful to have 20/20 vision, but I still need a microscope to properly see the unrealized losses in the chart below. It is so insignificant, it's very hard for me to be too concerned about it at this stage. The vast majority of Bitcoiners are still very sitting pretty, moisturized, and unbothered. So that he has like, this is him. I mean, not actually him, but he's like, this is the meme of of how he feels about the market right now, and how most Bitcoiners feel: unbothered, moisturized, happy, in my lane, focused, and flourishing. So again, none of what he's seen is making him freak out. Again, this is a long update. I'm reading way more than I normally would. Normally, I just paste a couple quotes, but I thought this update was super helpful. Again, very much worth $29 a month. Therefore, unless this market deteriorates a lot further, there's a decent enough chance that demand comes back eventually, even if it requires lower prices to motivate them. The ETFs are of particular interest since they have come roaring back to life after all our choppy sideways doldrums to date. In short, he's saying, in the past, every time there was a dip, the demand eventually would outrun the supply and the price would go back up. So the next step is to ask ourselves, how bad does it need to get before the real bear arrives? Meaning people really get pessimistic, which takes a lot longer to overcome with demand. Let's start with a threshold which we can confidently deem to be no bueno, no good. That would be the shot across the bow sell-off in prior cycles. The shot across the bow sell-off is the horrific waterfall decline after a market cycle peak, which is so large that it stops everyone in their tracks. Scroll down significantly here. Skip a bunch of charts. The market as it stands today is experiencing almost negligible pain. Either the bearish noise on Twitter is hyper amplified, which is true, or the commentators have grown much softer as Bitcoin appreciates in value, seemingly also true. Meaning people who are buying Bitcoin now they haven't experienced the pain of the volatility of the Bitcoin of the past. So to them, 9% feels like a bunch of pain when it's just ripping off a Band-Aid and not breaking your leg, which is what it used to feel like when Bitcoin was a lot more volatile. Things would have to deteriorate significantly before we reach the true bull market slaying pain thresholds of the past. For the time being, I still think it's okay to be bullish, meaning optimistic, while we're above the short-term holder cost basis, if cautiously so in advance. The extent of bearish damage at $80,000 is about as bad as I think a modern bear market would get. So he's saying, even if things deteriorate, even if it gets bad, even if, blah, 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 he doesn't see Bitcoin going below $80,000. And again, we went down to 74,000 as recently as April. So, not only do the highs march higher, the lows march higher. And hopefully that is, okay, a few more things. Much like the negligible unrealized losses, again, unrealized losses meaning someone's underwater, but they haven't actually sold. They're just temporarily underwater. We're seeing very few investors capitulating at this stage. Until we see serious fear and panic, it's hard to characterize this sell-off as a bear market starting one just yet. Meaning he does not see this dip starting a bear market, at least not with what he's seeing right now. It could devolve into one for sure, but the facts on the ground suggest we're just not there yet. All right, the concluding thoughts are kind of long. Forgive me here. We set out in this piece to assess the damage and compare it to the bear market starting shot across the bow sell-offs of the past to basically see, is this dip something we need to worry about or not really? And his conclusion is not really. The truth is the damage today is fairly negligible, and it has to get so much worse, all capitals, before we hit even moderate pain thresholds. This leaves us with a real dilemma. It's hard to call this a bear market because the evidence as it stands today suggests it has far more properties which resemble a bull market dip, meaning just a standard dip on the way up. By the time bear market thresholds are hit, we could be trading at prices of around 80,000, which is also where I think a bear market floor would begin being hammered out. So the short take is like, look, at some point the data might not look like a bear market until we're down at 80,000, at which point that's probably the low, which again makes predicting anything hard. Therefore, the correct approach is to think through scenarios and thresholds, and most importantly, what our decisions will be in each case. Until we break below the short-term holder cost basis at $108,000, things are fine in my book. If we do break it, then the odds are we are probably in a bear market, meaning it's probably going to march lower into the 90s or the 80s. Since demand is soft, we're also probably not blasting off to new all-time highs anytime soon. So you don't need to have fear of missing out exactly. Bitcoin's in his book probably not going to $140,000 and $160,000 tomorrow. I know I'm sticking my neck out here, and I reserve the right to be very incorrect here, but I don't actually think we're in a bear market. He just outright says it. This dip is not the bear market. I think we're in a dip, and I think the fear we're seeing in the public, mainly on Twitter, is because people don't actually hold actual Bitcoin. They hold altcoins like XRP, Solana, Dogecoin, Ethereum, or stocks in companies that are investing in a bunch of junk coins, which are down significantly more than 9%. He's saying we're seeing a bunch of fear and panic on Twitter, but it's not because of Bitcoin. It's because people are into crypto that is not Bitcoin. And that crypto is getting killed. So Bitcoin's down 9%, but they're panicking because they're not actually holding Bitcoin. They're holding trash that I've told you and James Check has told you not to buy. So people are freaking out in crypto land because they're not holding Bitcoin. They're freaking out for all their other stuff that's plunging like a rock when Bitcoin is holding up nicely and is only down 9%. He says, if I was to hazard a guess about the future, I think we will see our classic 80% correction. It just might not be in the Bitcoin price. He's saying, yeah, we'll see an 80% price crash in crypto, just not Bitcoin. So yeah, all the other trash, yeah, it's probably going down 80%. But that doesn't matter because we don't own all the other trash. We own Bitcoin. And so Bitcoin is in a class by itself. So anyway, then he's got this meme, 80% bear, call the ambulance. And the guy says, but not for me, and pulls a gun. And that's Bitcoin. So he's basically saying, yeah, if you're worried about stuff crashing 80%, then yeah, if you own a bunch of crypto trash, you probably should be worrying about it crashing 80%. And this might be the bear market that crashes all a bunch of stupid crypto 80%, just not Bitcoin. And who cares if the other trash crashes, because you're not supposed to be owning the other stupid stuff anyway. So anyway, I will stop sharing my screen there. So what does this mean? What it means for me is if I had US dollars to invest, I would put it all in Bitcoin right now. I mean, that's just what I would do. Like if I had US dollars, I would just invest them because I'm not gonna risk the upside chasing cheaper prices on the downside. The differential between an asset that I know will one day be worth $1 million a coin, I am not going to try to chase, 108, 104, $96,000 Bitcoin. I am not going to do that because that's a fool's errand to keep trying to time bottoms and buy cheaper. Now, if the price goes cheaper and you suddenly want more of it, we'll buy more of it. I've done that numerous times where I thought I had the amount of Bitcoin I wanted. I felt good about the amount of Bitcoin I had. Everything was kosher. And then the price dipped and I thought, well, I don't feel good about the price of I don't feel good about the Bitcoin I own right now. I want more. The price is now on sale and I want more. For example, earlier this year, I was 99% Bitcoin and I had 1% in Tesla as diversification, like as if that really provides me any diversification. But then the price of Bitcoin dropped into the 80,000s and I thought, I don't have conviction on Tesla. I love Tesla, but I don't have conviction on it as an investment the way I do with Bitcoin. And I was not willing to trade 1% of my portfolio in Tesla stock, 99% Bitcoin. I was not willing to trade that out at 100,000 or 90,000. But once we got into the 80,000s and then the number clicked to a 7, I think I did that conversion at like 78,000 per coin. When I saw the number start with a 7, I thought, I am actually willing to go swap out that 1% that's in Tesla into Bitcoin and get to 100% Bitcoin. So that's totally normal. If the price drops and you want to buy more Bitcoin, great. But if you already have money, you've already decided to invest in Bitcoin, and you've mentally allocated it there, then in my opinion, it's a fool's errand to wait for a lower price to buy it. Because again, there's all sorts of people that missed out on all sorts of upside because they were playing those games in the past. And Bitcoin never went down to the price that they thought they were going to buy it at. Plus, if the price ever does go down there, they freak out and they don't buy. So they're like, okay, if the price ever goes below 100, I'm in. Well, then the price goes below 100 and they're like, oh no, it's falling. If it's falling, it's probably going to fall some more. And they wait and they wait and they wait, which is what happened to me. I bought Bitcoin. The initial Bitcoin I bought was around $9,000. The lowest I ever bought Bitcoin was $6,400. But I had also bought some Bitcoin at 12 or 13,000 back in 2017, 2018. All these numbers I'm talking about right now are just 2017 and 2018 Bitcoin. My average cost is more like $35,000 because I bought Bitcoin, a ton more Bitcoin in 21, 22, 23, 24, and 25. The last 6 years, I bought a lot more Bitcoin, or I should say 5 years, 21, 22, 23, 24, 25, the last 5 years. But the initial Bitcoin was around 9,000 a coin. And I told myself if the price ever dropped in half to 4,500, I was going to buy a lot more. But of course, like an idiot, I did not, because when the price dropped, I thought, well, hey, there's probably a good reason it dropped in half. Maybe it's going to keep dropping. Maybe this is the end of Bitcoin. And I had not done the work to realize that there will never be an end to Bitcoin. It's the future monetary system of the world. So I did not buy the Bitcoin at 4,500 the way I thought I was going to. And as a result, I have way less Bitcoin than I would have had if I had bought Bitcoin at 4,500. What I should have done is say, hey, here's Bitcoin at 9,000. I'm planning to buy more at 4,500. Screw it. I'll just buy the more Bitcoin. And I would own a lot more Bitcoin at 9,000. Then I ultimately subsequently bought that same Bitcoin at 20,000, 30,000, 50,000 that I could have had for 9,000, all because I was waiting for 4,500. And then when it came, I didn't buy it because it was dropping. So the same thing is going to happen. If you're waiting for the price to drop, you're either not going to pull the trigger when it actually hits the price you thought you were, or you're never going to get that price. Like the price will just never arrive. And then you're going to be sitting on US dollars stuck, not knowing what to do with them. So based on James Check's latest update, first, it's fantastic. I would recommend his work. Again, you don't have to understand the charts. You don't have to understand all the lingo. All you just listen for is natural human speak, which is the kind of stuff that I, read. Some of it was a little bit, more complex, but most of it's just, hey, we're not experiencing pain. This looks more like a bull market dip than a bear market, a bear market, the start of a bear market. So anyway, it was me and I had US dollars. I would just dump them in. Bitcoin feels like it's on sale right now. Chasing lower prices is a fool's errand. And anyway, so, and if James Check's conclusion was this is the start of a bear market, plan on this sucking for a long time, then my conclusion, one second. So if James Check's analysis was this is the start of the bear market, it's probably going to last a year, this is going to suck for quite a while, then my recommendation for everybody would be dollar cost averaging, which is, hey, buy the same amount, $100, $1,000, whatever you can afford, $50, $5, buy the same amount every week and just let it run and let it accumulate. And you don't know where the bottom is. Nobody knows where the bottom is. But again, but we're not there. And so I think the easy thing to do is if you got money, I would buy Bitcoin with it. That's what I would do. Not financial advice, not legal advice, not accounting advice, not investment advice, not tax advice, not any sort of advice, just me. Hopefully that helps. Again, I love James Check's work because every time his work arrives, it's the only time every week that I feel like I have total and complete piercing clarity for why Bitcoin is behaving exactly like it's behaving, why the price is where it is, what I should do about it based on where the price is, where the price might go. It's just fantastic stuff. His stuff is really the best content out there. Again, it's $29 a month, and it'll let you feel a lot better about Bitcoin if you have your finger on the pulse of its vital signs of the price. And again, I'm spending a lot of time talking about price because I've done like 300 videos on things other than price. So, people want to talk about price, I'll talk about price too. So great time to buy Bitcoin. This dip looks like run of the mill on an upward trajectory. And anyway, if I had US dollars, I'd buy more Bitcoin, but I don't. So I'm just chilling like his guy. And here, I'll pull it back up here. I like his, I identify with his meme here. Where is it? Here we go. I identify with his meme where he's like, look, how do Bitcoin holders feel right now? They're chilling, unbothered, moisturized, happy, in my lane, focused, and flourishing. That is how I feel and that is how James Check feels. The vast majority of Bitcoiners are sitting very pretty, moisturized, and unbothered. And again, if you just bought Bitcoin at a price higher than today's price, give it a little time and you will be sitting there feeling unbothered, moisturized, happy, in your lane, focused, and flourishing. Have a great day, everyone.